Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, April 2nd, 2009. The big news of the day was today's ECB interest rate decision. Economists expected a 50 basis point cut, but the bank delivered only a quarter point cut to 1.25%. The ECB is taking a gradual approach to bringing down rates, and there is debate among policymakers whether to follow the lead of the Fed and the Bank of England and lowering rates even further and using its balance sheet to buy assets. The new rate at 1.25% is a fresh record low since the ECB took charge of monetary policy in 1999. Also today, leaders from the G20 summit agreed on a regulatory blueprint for cracking down on tax havens, regulating hedge funds, and rebuilding trust in the financial system, while also pledging more than $1 trillion in emergency aid to cushion the economic fallout. The euro-dollar pair broke out of its recent sideways trading to climb around 280 pips today, with most of the gains coming after the ECB announcement. The pair had been trading in a triangle pattern, which it broke out of overnight to the upside. The pair found resistance at the 1.35 level in early afternoon New York trading and retreated slightly from there. Stocks around the world saw significant gains, fueling a sense of risk appetite that helped higher yielders at the expense of the yen and greenback. The main index in Hong Kong, for example, rose 1,000 points or 7.4%. In Europe and London, indexes were up between 4 and 5%, and the Dow Jones index in the US moved above 8,000 for the first time since February. The euro-yen pair put on a second leg to its rally that started in the middle of Monday after the pair hit support near 126.40. Today's surge amounted to 380 pips, putting the pair above the 134 level, and now it sets its sights on its highs from last week around 134.50. In the UK, housing prices, as measured by Nationwide, surprised forecast, calling for another monthly decline. Instead, prices rose 0.9% on the month, which eased the annual decline to 15.7% from February's 17.6%. The report said that even though the rise in prices is welcome, it's too early to tell if the market has reached a trough. The Bank of England has taken strong measures to ease the tensions in economic and financial markets by cutting rates and commencing with quantitative easing. But it will take time for these policies to work. In a second release from the UK, the construction sector contracted at a slower pace, as well with the PMI rising to 30.9 for the March period. Anything below 50 still indicates contraction in the sector, but it still comes as a welcome sign as economists predicted levels similar to the previous month. The pound-dollar pair cracked another downward sloping trend line to start today's session and rose from the 1.4450 level to test 1.4750, a 300 pip move. That brought the pair up against resistance from last week. With risk appetite and bank shares in London soaring, the pound extended its rally that began on Monday and which has seen the pair climb more than 600 pips from support near 1.41. The euro-pound pair extended its fall, breaking below support at 0.9150 to set a 4-week low below the 0.90 level. The gains in the pound came in the wake of its better-than-expected housing data. The pair found support prior to the New York Open, and following the smaller-than-expected interest rate cut from the ECB, the euro paired its earlier losses in more volatile trading. By the New York afternoon, the pair had retested its open. Turning to the U.S., the number of Americans filing for unemployment benefits rose 12,000 to 669,000, the highest level since 1982. It's the 9th straight week that claims have been above 600,000. The total number of people continuing to receive benefits rose to 5.72 million, a fresh record high. Despite better data in some sectors such as housing, the labor market remains highly pressured, which could undermine consumer spending. U.S. factory orders increased 1.8% in February, which breaks a streak of 6 straight months of declining orders. The news may signal that the worst of the manufacturing slump may be behind the U.S. January's figures, however, was revised lower. The ISM Manufacturing Index showed yesterday how new orders increased, and today's data echoes those sentiments. Factories may be done adjusting their stockpiles and running down inventory that they were unable to sell in the fourth quarter. If so, they may be ready to start placing new orders and hopefully start a rebound in this sector. Though the greenback fell against the euro and pound, it rose against the yen as the risk appetite in the early New York session boosted the pair to the 99.90 level, the highest the pair has been since November 5th. Stocks in the U.S. were responding to a unanimous vote from the Financial Accounting Standards Board to give auditors more flexibility in valuing illiquid mortgage assets that may have longer-term value. This alters so-called mark-to-market rules, which can help banks boost operating profits when they report first quarter results later this month. The rise in risk appetite and sense of better sentiment in regards to global growth going forward helped boost the loonie. The US dollar-Canadian dollar pair slid about 300 pips after it broke a short-term line of support yesterday. The recent down move from the 1.27 level paired about 76.4% of the rally we saw from last Tuesday to yesterday's high. From there, the pair saw a slight counter-rally. Coming up tonight, Australia will release its services PMI. Overnight, Switzerland will post data on consumer prices, and the UK and Eurozone release their services PMIs. The UK is also expected to release its Halifax House Price Index. Tomorrow, we have the ever-important non-farm payroll release from the U.S., with the unemployment rate expected to move up to 8.5%, a 25-year high. Also tomorrow, the U.S. will post its ISM non-manufacturing index, a survey of conditions in the services sector. And that concludes our recap for today. Thank you for joining us here at CMSFX.com, and happy trading.